Good evening, everyone. Welcome to Closing Comments here on April 9th. Heck of a rally today across all of our markets as they responded to the pause on tariffs today. Large ranges and large percentage gains across the board as the markets liked what they heard. So let's dive into these charts here and see what happened. June live cattle for starters. Today, prices initially opened up lower and sold off to about $1.92, briefly undercutting $1.92. Price did trade in about a $1.50 range early in the day before that headline hit, sending this market higher. We did get a close above our 50-day average and above our bear pivot here at $1.9820. These are good signs for the bulls. As long as they can maintain this 50-day average, I'd expect the bulls to pick up the pieces and continue with this momentum and push this thing higher. In the meantime, volatility looks like it's here to stay, so be ready for continued wide daily ranges. But the bulls are definitely have the wind at their back here, and as long as they can hold this 50-day average, we should see upside continue from here as this weekly uptrend kicks back into gear. Feeders up next. Another $10 range day today. Prices did open up a little bit lower, briefly undercutting our prior day low, but also rallied hard late in the day as that headline was announced. Recapturing 275 and getting back above the 50-day average are big wins for the bulls here. Like the live cattle market, expect these wide daily ranges to continue and volatility to stick around, but the bulls do have the upper hand here at the moment and the wind at their back. Expect them to keep pushing this market higher here in the near term, and $3 could be back on the table. Pretty bullish picture here as we were able to recover some of those major levels in the cattle market, and good upside here today. Look for that to continue throughout the rest of the week. Corn market saw some upside. Pretty quiet day in comparison to the rest of the market. We did get a close above 470, which was the green light for the bulls to reverse this thing into a potential new uptrend. We'd like to see prices keep pushing up here towards 480. This 477.5 mark from our high back in March will be a key level to watch. Anywhere from 477 to 480, we could expect to see resistance come in here. Dips should be seen as buying opportunities. We'll have to wait and see how the first pullback and the new breakout responds, but as long as we're above these major moving averages and this 470 level, I expect the bulls to stay in charge here and keep pushing this market higher. We are getting close to rolling into the July contract. Volume is about equal here tonight, and July is catching up to that May contract, so be ready to roll over as we go into next week. Crude oil market also saw some volatility today, initially down as low as $55, which was the cheapest we've seen oil in years. Snapback rally following that tariff announcement as well. We did see lots of upside with prices closing back up here above 62. This is our bear pivot for the week. We do see a bearish downtrend here, big picture wise, but given the news, wouldn't be surprised to see continued upside here as we are coming off of extremely oversold conditions. Be looking for price to push back up into this mid 60s, which was our some of these prior lows and the breakdown level for our multi-year breakout that we're seeing here. Expect resistance to step back in here in the mid 60s, and the bears will want to take that and potentially keep pushing this market lower and keep it under the 65 mark. So in the meantime, a pullback is still possible. Volatility is guaranteed, and be ready for a resistance to step in above. But in the meantime, this market remains headline driven, so just be cautious. In the equity markets today, we saw a pretty wild day of upside. 560 point range here on the S&P, which is the largest I've ever seen. 10% gainer on the indexes, recovering a lot of losses, going from peak fear on Monday morning to back to the 20-day average in a pretty short period of time. Bulls definitely like this and definitely relieve some of the resistance. However, there is a lot of work to do as a lot of our major components are going to have to clean up some of the chart crimes we've seen over the last couple months here. Going to need some of those big components, the Meg 7 stocks, to recapture some of their 50-day averages and be able to reverse this thing. The wind is at their back at the moment, so we could see continued upside. Also, expect that volatility to continue. Inflation reports the rest of the week, as well as jobless claims tomorrow. Definitely newsworthy events that could continue to keep this market trading in these wide ranges. Lots of overhead supply we're going to have to chew through, so it's not going to be a straight shot from here. At least at the moment, it doesn't seem that way, but expect the volatility to continue. This market remains very headline driven, so things can change in a hurry, but this is the first step to a potential recovery here going forward. And just stay defensive, stay cautious. There are going to be some good deals out there going forward, but we do expect that volatility to continue. And before we settle in for the long haul on any upside or potential uptrends, we're going to need to see our indexes get back above our 50-day averages and see some constructive charts on the underlying components. So no need to be in a rush. Let's stay patient and stay defensive as this volatility remains. But we are seeing first good signs to a potential recovery here. So that's all we got for tonight. Have a good evening, everyone.